Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's rally has stalled after the brakes were hit on Monday as investors now waited to see if last week's rally, inspired by softer than anticipated October inflation data, might have still more room to run. In light of the pattern, we can see here that potentially we can still reach 68 cents from a technical point. So I still feel there is, and therefore could eventually reach that objective of 68 before turning around and profit taking emerging. Earlier in the day, the Reserve Bank of Australia released its latest minutes of its monetary policy meeting. In the statement, the board doesn't rule out a return to 50 basis points or pause, while also saying that there is no preset path considered a 50 basis point hike, adding there was a stronger case for a 25 basis point in November. Eyes now look to this Thursday's Aussie job numbers, and which no doubt will put a little bit more of a rocky session into the current one that we're reviewing. Still, the ADX is trending to a bullish case, so I still feel that any pullback will be shallow towards 66.60. And as I mentioned, resistance holds at 67.15, and beyond there, up towards 67.65 and 68 cents. Having rallied all the way to around that 103 objective, the market is now taking a slight pause due to the US dollar index, which measures the greenback strength against a basket of six major currencies, has rebounded from the lows of 106 to 106.60. What initiated the move was that still the US federal officials are saying that there will be still further rate hikes, but now talking about a possible 50 basis point rate hike for the December 13-14 gathering. Following four consecutive increases of 75 basis points, it's probably now be appropriate to see a slower pace of increases. Fed official Miss Bernard said overnight. The Fed lifted its key interest rates now to a range of 3.75% to 4% after seeing rates at zero earlier this year in March. Still, the market is still keeping an eye on this top side as the technicals are still holding with the ADX, that is, it's more to the fact bullish, and we could see a break eventually through that 103.75, which we've outlined here, and maybe on towards 104 to 104.80, 85. However, since we've reached my objective of 103, I would rather sit out for the moment. But for those trading, I do feel that 105 could be on the target, but this holds little merit to my view other than the fact that the ADX is trending bullish. The dollar yen, the market could be holding a potential flag here and therefore could see a further down test, and that is towards the region of 136.40.50 area. With the current rise in progress, I do feel that there could be resistance around 140.65, and if rejection comes back into play, as I anticipate, then we should see a move down. The pound was a little bit weaker, but the call yesterday was at 118 and then turned neutral. And it was probably wise to do that due to the fact is there's a bit of profit taking coming in, and we may actually see a little bit more weakest play into today's session. That is towards 117.10, 15 area, or maybe down to about 116.5 before seeing the next move, that is towards that top side. So it's around this support area, 116.5 here, and then maybe on towards 120. Finishing off with gold, market's still holding very well, even though the dollar did bounce. But seeing a little bit of a consolidation as we sort of approach the highs, where the objective is at 1,784 to 88 due to the fact that we are overbought. However, the ADX is trending bullish, so therefore gives that last rally to the bull run, and then maybe a turn down from 84 to 6 and back down towards 1,754 to 56. Oil plummeted around $4 after tackling the topside resistance at 89.70.85, and from the rejection has now put a little bit of pressure on the support seen at 83.70.90. If this level goes, then I feel we could see further risk towards the downside, and that is towards $78 to $79 a barrel. But first, we do need to see the break and close of New York beneath the support level of 83.70 to give that downside call. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.